Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, May 28th, just after the close of business. I'm here with John Mousseau, Director of our Fixed Income, as well as CEO, and we're just going to give you a little bit of a feel for what we saw this week, how we're positioned, and how we're looking at June with 5 months already in the books. This week, equity-wise, we saw a little punch back into the growth names. Good bid in IT, software, biotech saw a bid this week after being quiet now for going on 4 months. So a little rotation from value into growth. Now, will that continue? Difficult to say. It was only really a 10-day move here. Remember, we've been on a very strong value bent since really last August. So we're barbelled in our portfolios. We're taking advantage of the value names along with growth. And in our U.S. equity and U.S. core portfolios, we dipped down nicely into that mid-cap and small-cap area. So well diversified. Said it before, diversification for the first time in years is your friend in the equity market. For 6, 7, 8 years, if you weren't large cap growth, you had an anchor in your portfolio. Now diversification is back to being a benefit, a friend to the portfolio. Moose, you've seen all types of economic numbers being thrown at you. What's the bond market telling you on some of the on the back of some of these numbers?
It's funny because we went through a week, Matt, where yields crept down somewhat. 10-year Treasury bond went from 162 to a 160. 30-year bond went down 4 ticks, 232 to a 228. Long Munis down 4 and 5 basis points on the longer end. Good demand. Go to the economic side, a little different. What did we see? We saw initial jobless claims down more than expected. It's almost ready to pierce the 400,000 level. We don't want to talk about that in terms of, that's not a number that we want to keep there. We want to go much lower and get rid of these jobless claims. But it's significant on how far it's come down since the middle of the pandemic. More importantly, you looked at the personal consumption expenditure. That is the measure of inflation that the Fed likes to use. Quarter over quarter, up 2.5%.
I know you're, because of the COVID scenario with numbers a year ago, you're much more interested in short-term, month-over-month, and quarter-over-quarter versus year-over-year.
Right, that's exactly right, Matt. And we have a slide to show you that on core PCE. But what we look at, and Matt just said it, is going forward, this is whether you're talking about just core inflation, headline inflation, PCE, any number, we continue to look at month-over-month numbers, quarter-over-quarter numbers. Year-over-year numbers don't mean that much. And we do know out there, and anecdotally you all know this as well, is that firms have pricing power like they haven't had in 20 years, and they are not worried about market share. They are passing along the cost to us, the consumer. And we hear from the Fed that this is transitory, big word for temporary. We're going to see whether that's the case, because the bond market's biggest concern as we move into the summer is whether the Fed's impression of inflation becomes unmoored or unattached from the real world, and that's what we're going to watch.
Great points. The other area, and we've talked about this for 2 years now on the video, that I'm keeping my eye on is the creep higher in foreign rates.
Right.
Remember, our clients know this, and people that have been following the videos, that negative interest rate environment throughout Europe and throughout the developed and emerging market world really kept a cap on our rates. You're seeing some of those rates float up. As a matter of fact, Germany, which, if you recall, at the worst of it was negative 70 basis points on their 10-year Treasury.
Right.
They're right now negative 15 basis points.
Right, and getting closer, and I think Matt brings up a great point, is whereas the European rates were dragging U.S. rates down for a large chunk of the second part of 2019 and early 2020 before COVID, now with USH rising, albeit a little slowly from this point now, we are dragging those rates higher. And in our opinion, higher rates in Europe is a good thing because it improves the banking system.
Okay, good. We head into Memorial Day. This is the 50th anniversary of Memorial Day becoming a federal holiday. Prior to 1971, it was always observed, going back all the way to 1867-68, when it was called Decoration Day after the Civil War, because grave sites were decorated. So this is a long, traditional U.S. holiday in which we honor our fallen soldiers in all branches of the military. So enjoy the weekend, and we'll see you next week.
Thanks a lot.